It's a quiet start to the financial week next week as Monday kicks off with a bank holiday in Japan, the US and Canada. However, LCG's Ipek Ozkardeskaya says the financial markets will again be looking to the UK inflation data, which is out at 9:30 a.m. on Tuesday, as well as employment data out on Wednesday, for clues as to when the Bank of England will start raising interest rates.
So the inflation is expected to remain at about zero levels and has been the case since February this year. Given that we are already in a deflationary phase due to routine commodity and energy prices this year, we don't expect anything to happen or any disappointment on a soft inflation read unless it's really bad and it's really negative. So this is not expected. Obviously, the MPC has already given a soft view. We will be seeing some more forecasts of some more details in November inflation report. Until then, I think that the inflation is not going to be any surprise. So next week's data could be some non-event. We have seen pound rising against the US dollar this week, and given the dovishness from the Fed, we might expect the pound to advance to 154.90, even 155 levels from next week.
It's light in terms of Chinese data releases next week, although overnight on Wednesday, Chinese inflation and producer price index figures are scheduled for release. Now, the Federal Reserve meeting minutes released this week revealed that the Fed's worried about a global slowdown led by China, the strong US dollar and low US inflation. So the market will very much be closely watching any developments in the Chinese economy.
Thankfully, Chinese markets were closed this week, so the commodity markets could take a breather and stabilize a little bit. So from here, we are very much interested in what's going on in China, because China has an impact. It's a big global demander, especially on the commodities side. So we will be watching the inflation figures from China, and they are expected, the consumer inflation is expected to have slowed down from 2 to 1.8% on year to September, and the producer prices are still going to be negative and deeply negative. We are looking at minus 5.9% on year. So at this stage, if we have some bad data from China, it might add some market volatility. Is it going to be high, positive or negative? That's anybody's guess, because it all depends on market expectations at this stage. We expect the slowdown in China to bring the Bank of China to add more stimulus. So if this is the case, especially given the dovishness from the Fed, we might have some positive sentiment in the markets, and it might lead to a global rally in stocks and commodity markets. But you also have the other side of the coin. Fundamentally, this means that the Chinese economy is still not doing great enough, and that might keep some investors still skeptical.
The euro will again no doubt be in focus next week, especially with the latest inflation figures scheduled for release at the end of the week. The ECB meeting minutes released this week revealed that members believe that there are heightened downside risks to inflation and need time to assess the impact of China uncertainties. But they do say that there is a significant stimulus still in the pipeline.
Well, it's going to be very similar to the UK. We know that the inflation in the Eurozone has not picked up, and there is going to be no surprise at a soft read. We have seen some negative figures, so that has been quite disappointing, but now we are getting a little bit used to this deflationary environment. I don't think it's going to have any major impact on the euro-dollar's positive trend at the moment. Euro gained at about 1.5% against the US dollar this week, and given the demand, and especially as a funding currency, the euro has still some potential on the upside, especially against the US dollar, which has been losing a little bit of its shine during this week due to dovish Fed minutes. So we might even advance to 140, 1460, 115 levels. The only risks on the downside, is a major risk, is the ECB. We still see some discomfort because of a rising euro. We know that the ECB doesn't want the euro, any euro appreciation. So at this stage, some already started talking about an expansion in the quantitative easing as soon as October 22nd meeting. So there is no clarity. It's just market talks, but the risks is the downside risks prevail, but the trend on euro-dollar is still on the upside.
Looking at the trading week ahead, Ipek discusses her trade idea of the week, which is a technical update on gold.
Gold has made a significant move on the upside this week, and we are at a fresh monthly highs. 1157 has been hit just before I came here, so there is some more potential on the upside. Technically speaking, we are about the 1135 pivot level, and if we close the week above this level, and it looks like it is going to be the case, we might expect an extension to 1170, $1175 levels. Again, it's all depending on the US dollar, but the US dollar seems to have lost a bit of its shine, especially on the back of Fed dovishness, and that sell-off in the US dollar, that cheapening in the US dollar might bring some more investors back in the gold market. So this is the technical point of view. On the physical side, we still see that we lack some demand, but entering into this autumn period, we might even see some support from the physical market, and it looks like the investors are creeping back in the gold market.
That's all for this week. Good luck trading, have a lovely weekend, and goodbye for now.